Welcome back. You're watching Stock Watch with me, Nolutando Mtontinambo. And joining me to take your stock-related questions tonight are Andrew Padoa from Sasfin Wealth and David Shapiro from Sasfin Securities. Please be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS to 41392 or on X using the hashtag StockWatch. Gents, good evening. Thank you for your time. Hello, David. Hello, Andrew.
Yes, you want us to say hello?
I do. I prefer it if you say hello back.
I know.
Thank you. Welcome.
You kept us unaware. You've got to give us a signal.
Well, great to have you, gents. Thank you for being with us. We've got quite a bit to unpack today. We'll get right into it. Andrew, we'll let you take the first one here. The first question is on Apple. It says, I have seen some are selling Apple while others are rating it as a top pick. What does the panel think? What do you think, Andrew?
Sure. So I think Apple's a phenomenal company, but the valuations have got a bit higher. If we look at, Buffett sold it a couple of months ago, and I think that's where we got a lot of attention for, should we be selling Apple now? It's on about a PE of 35, but it was in about 2016-ish, about 2016 when Buffett bought Apple, and it was on a PE of 12. We've got this AI theme that's going on now. So a lot of companies are reinvesting heavily into CapEx to buy these NVIDIA chips to try and stay ahead in the AI race. So I think your PEs are a little bit higher, but I think Apple's a good business, but maybe a little bit expensive at current prices.
That segues perfectly into the next question, and I'd like you both to chat to me about this one. It says, I read this weekend that investors should be more concerned about the potential bursting of the AI bubble than a looming US or global recession. Have we created a bubble? David, let's start with you here.
I can give you a simple answer, no. No bubble. The AI boom is only starting. And I think that investor expectations are a little high. In other words, they expect immediate gratification. It takes time, and the models are still being developed. What is happening in a big way, and this is where I tend to put my money, I would rather back the Zuckerbergs and the Satya Nadellas of this world rather than some journalist or some commentator or some analyst, In other words, they're putting their money there and saying, it's rather we invest than we don't, because if this does take off, which is likely to do, and we're on the wrong side, we're out of the game. So just be patient. Every new theme or every new strategy takes time. You get the ups and the downs, etc. And don't be persuaded by short-term volatility. And there's something Andrew will know as well. And, everybody's looking at NVIDIA. And there was an article that came out of Capital Economics looking at NVIDIA and said, everybody's been critical about their valuations. But if you go 3 years back and you look at what their sales were and you look at what people projected, they way out. No one knew 3 years back where NVIDIA would be today. And taking that forward, we don't know where it's going to be in 3 years' time. We don't know what other products. So that could be good, it could be bad, but we don't know. So my view is that just go, don't be cynical about it. Follow where the big money, follow the smart money, which are the companies that continue to invest in AI.
Thank you for that, David. Andrew, would you like to add on to this one?
Yeah, sure. I agree with David. I think in the AI space, I think there's definitely going to be companies that are going to go bust and go to zero. I think that's just kind of the nature of it. But there's going to be some companies that are going to do incredibly well. And the way I think about it is scale is a massive advantage for these technology companies. We're taught at university that scale becomes a disadvantage when you're too big. It's going to be hard to keep growing. But I would argue that in the tech space with AI, scale is a massive advantage. You need the cash on the balance sheet to be able to afford these NVIDIA chips. If the three of us got together and started a company, it costs a fortune to buy these NVIDIA chips. We just don't have the scale. So I think the Microsofts are going to get stronger, the Metas are going to get stronger, and yeah, maybe the next Meta or the next Alphabet is going to be Meta or Alphabet.
Very exciting indeed there. Let's stay in the United States because the next question is about American banks. And the question is simply, should I buy American banks? There's just so many. Angie, let's get your thoughts on this one.
Sure. I stay clear of the American banks, and I think also American banks is a very wide term. You know, are you looking at Goldman Sachs, which is in the more the dealer space? Are you looking at Citibank, or are you looking at Morgan Stanley, which is more of a wealth management company nowadays? So I think we can't kind of paint all the companies in New York, their financial institution, with the same brush. I'm not going for banks. You know, banks are just cyclical in nature. I'd rather stick to companies that, you know, have more predictable future earnings, high returns on capital, low debt on the balance sheets that kind of dominate their markets. So, yeah, I don't have a lot of exposure to banks. I'd rather stick to tech, healthcare, consumer discretionary, those kind of sectors.
David, do you want to add on to this one and maybe also thinking of the interest rate cycle, where we are in it, what that might do to bank earnings?
You know, when banks will come to their own, and that's when we start to go into an economic boom. At the moment, we're in no man's land. We're still battling. We're still coming out of a very slow economy. And in slow economies, people don't do anything. And banks will thrive. And that applies to the same thing here in South Africa. Not much is happening outside of lending a little bit of money here and there. So we need a thriving economy where banks are actually used to finance either mergers and acquisitions or finance infrastructural development, finance a lot more transactions as people spend. I think then you'll start to see a better case for banks. But I'm in Andrew's camp at the moment. I don't necessarily buy banks. You know, I find them in the right time, in boom time. And then also you've got the trading issues. You know, you never know how those traders are going to get there. You know, are they going to get it right, or are they going to get it wrong? You know, so that's up and down. But at this stage, until we get a lot more growth, you know, I'd hang back.
Brilliant. So let's move on now to China. It's a question around BYD, or maybe EVs as a whole. It says, a Chinese electric car giant, BYD, sold a record number of passenger vehicles in August, with sales of hybrids growing faster than those of battery-only cars. Do I buy a BYD directly or other EV supporting stocks? Not sure which one of you would like to take this one. Andrew?
Just keep away from China. Full stop.
Okay.
You know, they are the biggest, by far, they're the biggest EV nation, and produce significantly more than others. And there's a reason for it that I found out recently. If you want to buy an electric car, you get your license straight away, your license plates. If you want to buy a fuel, you know, if you want to buy a old-fashioned type vehicle running on fuel or something, then in that case, you can wait 6 months. So they're very popular in the China. What is happening is that they're still very good vehicles, and they are making their way into challenging the traditional, you know, the traditional motor manufacturers. But you know, Andrew spoke about Buffett. Buffett was in BYD, Build Your Dream, BYD, Build Your Dream, many, many years ago. He was very first, it was Charlie Munger who discovered this business. But I think they've been reducing their stake, which is always an indication that perhaps this is a little on the expensive side in that. But it's a difficult area to get into at the moment, EVs.
Yeah.
And
Nolly, if I Sorry,
go.
if I can just chip in there. I think if we just kind of look at Tesla, for example, in the EV space, I think something I think a lot about is first mover is not a competitive advantage. You'll only know how good you are when the competition come. And Tesla was obviously first mover in this EV space, shown how you can make money and be successful, and now the competition's come. I think there's over 100 electric vehicle companies in China.
Sure.
So there's a lot of competition. Like David said, it's difficult. It's still early. We don't really know how the market share is going to end up in 5 years' time. So for me, I'd stay away, just because it's just too uncertain in the next 5 years.
No, there's also something, I mean, as we're talking about it, it's when we say it's not easy, we're starting to see, in fact, the hybrids coming in. What we are seeing is that the momentum slowing. And one of the reasons is that there's still issues with infrastructure. You know, and I'll quote my daughter who has an electric vehicle in Boston. She uses it in city. And the reason is that when she comes home, she can charge it. There's always an issue to go outside, you know, on a longer drive. And if they're going down to New York or something, they use the internal combustion engine. They use their other, and that's one of the big issues. Now, in Europe, you don't necessarily have your own private garage that you can charge. And it's an issue that is keeping electric vehicles from really growing, is that it's very much an in-city type vehicle. And we've got to get battery, you've got to get a lot from the batteries, and you've also got to get the infrastructure built, you know, so that you know, I can drive 200 Ks, 300, get it, and just know that I'm going to come across a lot of charge stations. So I bring it up because it's a very important issue in the EV space.
Thank you for that, David. Andrew, I actually want to go to also one of the thoughts that you've mentioned there around Tesla. A question that often comes up here on Stockwatch and even just in our newsroom is the question around Tesla's investment case. You know, as you said, being first on the scene doesn't mean that you have the competitive advantage. We are seeing them moving to driverless vehicles and the likes. But does that investment case still hold for you? Is it a strong one? Is it the Magnificent Six without Tesla?
Look, I think Tesla is almost a play on Elon Musk as well. You know, the man's brilliant, and if you believe in him, then maybe Tesla is the way to go. Tesla is likely to be one of the last men standing in that EV space because at least they're profitable. You know, those 100 companies I mentioned in China, apart from BYD, I don't know if anyone else makes money. So I think Tesla is maybe a little bit of a riskier play for the younger person who's willing to take a bit of a gamble. But, you know, not for someone's hard-earned savings who's in their 60s or 70s.
Guys, we have quite a few more questions to get through. The two-pot system, I think, what's today, the 2nd of September. So two-pot system, good and going. Viewer would like to know if it's possible for any of the retirement administrator stocks to benefit from the system. David will take this one.
I'm not sure. You know, we're still trying to find out a lot about the two-pot system. And I mean that in all fairness. I've been reading an enormous amount about it, but we don't know how it's going to unfold. We know the theory, we know what you can do, what you can't do, where you can go, but we don't know how many people are going to actually take the money out. Remember, they're going to pay tax on it. Remember how it affects their future earnings. You've also got to understand the size of the pension fund and provident fund. So whether these fund administrators are going to start charging a little bit more for more administration, I don't know. You know, so it's still a mystery to us. You know, we know the theory behind it, and over and above that, while we're talking about it, there's still a lot of questions about how much money is going to get into the economy, be spent in the economy. How's it going to affect asset allocation? So I think it's going to take some time before we actually get a feel for it. So I can't really answer it, with knowledge.
Yeah, I think time will certainly tell there, David. We stay local now. A question on SPAR, the retailer. Said, I read that SPAR could buy Westpac or its assets. Is this something that could happen? Would it be good for SPAR? I don't hold any SPAR stocks yet. Andrew, would you like to take this one?
So my honest answer is I genuinely don't know. I'm sure I saw something this morning that said SPAR not looking at it, but I may be wrong. I think they're still trying to figure out their Sept rollout and fix that. I'm not sure if they're looking at Westpac.
I think you did right. Yeah. I think they've got enough issues. You know, They don't have to pick up another company that's battling. You know, that is in business rescue or looking for money on that.
Yeah.
You know, they've got enough of their own issues at the moment. So, I wouldn't make anything of it.
Yeah.
It's just one of the grocers like Pick and Pay that have let us down or just gone astray. So.
Do you think we can bring it back, David? You think SPAR could get a hold of its, like Andrew says, its IT issues and eventually just re-emerge as a formidable competitor in that retail space?
We don't, again, we don't know the extent of the damage. No one believed that Pick and Pay would be in the position that they're in at the moment. That came as a shock. They just fell off the cliff. We knew things, in fact, we didn't even know things were bad until it started, we started to hear stories. And when they've revealed how bad it is, it's quite an issue. I think SPAR's probably, there were a lot of bad deals offshore as well. And then we had the local issues. What concerns me, SPAR it's a buying organization. You know what I mean? That's what it does. It's not really a grocer. It's not really a retailer.
Yeah.
It actually, you go to SPAR and it's like a co-op where they get things for you. It really relies on its on franchise or franchisees, and yes, slowly they're trying to get it right, but again, very disappointed in their performance. It is improving, and hopefully with a little bit of love and care they can get it right. But I always avoid companies that are being battered and bruised and trying to recover. I'd rather just say, if I'm going to buy a grocer, let me buy a ShopRite.
Yeah, difficult to compete with ShopRite right now.
Yeah.
Let's move on now.
Andrew, they know a lot more about SPAR. Andrew's boys down there in KZN. I've got lots of stories to tell you.
Speaking about turnarounds, there, transaction capital, right? That's where we've seen a huge attempt, I guess, at a turnaround. The question here is, what does the panel think of transaction capital's turnaround to date? And We Buy Cars, can I still buy it? Let's talk about that one, Andrew.
I'm going to pass this one on to David.
You're going to pass it on? Okay.
Those are not two stocks that I follow at all.
You know what?
Yeah.
I think transaction capital, walk away. Just leave it. It came under enormous amount of pressure. They're battling there. The fact that they even listed We Buy Cars was a desperate kind of move to get money. It's a good business, and it seems to be doing well. It's got a lot of following in the market. I'm not a second-hand car man myself. I'm meaning that, it's not an industry or a sector that attracts me. If you want to buy second-hand cars, you can go to Bidvest. They've got McCarthy in there, who also sells second-hand cars. If you want to, or there's CMH, and all of them do it. But I don't take away from the management of We Buy Cars and the operation. I just find it's a very difficult operation to understand. You're buying a used vehicle and reselling it. So I don't know. Yeah. For a man like Andrew, who loves his IT, who loves AI, who loves Apple, healthcare, and that, I'm not sure second-hand cars is his game.
But I'd like to get...
What do we call it now? Previously owned. Okay.
Yes, previously owned.
That's the PC way of saying second-hand cars. Yeah.
I wanted to actually speak about some of these, I guess, also from the Pick and Pay conversation we had earlier, the listing of Boxer, the listing of We Buy Cars. I think earlier today, an update coming out of RCL, the listing of Rainbow. So a lot of these new listings are these breakaways here. Different, I think, a reception from markets. But I'm keen to get your thoughts on those, David.
Well, with the rainbow chickens.
Yeah,
they got rid of rainbow chickens because no one else would buy them from them. I said, listen, let's just give it to shareholders. It's taking us down. Even though RCL stands for Rainbow Chickens Limited, was the original Rainbow, and the result was okay because they've gone back to their original form. What was interesting, and this is more down Andrew's territory, is that the sugar market seems to have improved. They seem to be getting a lot more from that side of the market. The rest of it, I don't know. It's doing okay. I think food manufacturers. Wayne was saying the other day, just leave me out of chickens, leave me out of anything that grows, leave me out of commodities. Whether I've got to read wheat or whether I've got to read maize or got to read peanuts, leave me out of it. Yeah. And I think it pretty much sums up how difficult that industry is. It's a commodity industry. So, some of these new listings and those kind of things. But we buy cars. Coming back to that, I don't know. I'm not going to knock it.
Yeah.
It seems to be a decent business, but it's just something I don't really follow. And Andrew just opted out, the youngster. Yeah.
No, I can chip in here. Something I picked up on the RCL was, they flagged higher margins in the pet food business, and that pet food or the pet industry is something we chat quite a bit about, David and I, internally. If we look at Nestle, about 10 years ago, they got into the pet food space, and it's become a meaningful contributor to Nestle's, total sales. So pet food is an interesting little angle there, and it seems to be working for RCL.
Very interesting indeed. Let's talk about another holdco now.
People like their pets more than they do their children. Yeah. So
I agree. Millennials. Yeah.
It's
millennials.
a big area.
Let's talk about Brait. Viewer would like to know, does Brait have a real investment case? It is a holdco, so those are complex on the JSE. Andrew, I'm wondering if you'd like to keep this one or pass it on to David.
My short answer is no, and then I'll see if David's got anything further to add. But I'm a hard no.
There are a couple of companies that have been listed on the JSE where they've been able to lose money faster than Houdini. The money vanishes off their balance sheet faster than Houdini could vanish. Could also escape. Or David Copperfield, illusionist. And sorry, I didn't get that quite articulately, but you're getting the picture.
Yeah.
And I think Brait was one of those companies which just managed to lose an enormous amount of money, and they're battling to turn it around.
Yeah.
They did list off Premier. They still got the Virgin. What's it? It is Virgin Active.
Yes, Virgin Active. Yeah.
And they're trying to build up new look. I don't know. This is once again involved, hoping to use this as a vehicle to do something. But I'm not one for these turnarounds. I'm not one for recovery stocks for turnaround, or the last puff of a cigar or something like that. That's a Buffett quotation. Just. Where you find a stompy on the ground and you pick it up because you can get one or two more puffs out of it. I prefer to look for successful businesses that are, can grow on their success and build on their success.
Got you. Andrew, would you like to add that, or are you good? It's still a no.
I'm good.
Just a no.
Okay. I agree with David.
Last one for the evening, rather. David, Sanlam. Viewer says here, Sanlam keeps making these deals. Are they adding value? And I guess there was a report out today about a Sanlam deal, I think, with African Rainbow Capital Financial Services Holdings. But we've seen quite a few of these deals emerge over the last year or so.
Yeah, I liked what Paul Hanratty was doing. I really did. I think he was buying selective insurance companies that were bolt on, that he knew, and I think he's been doing pretty well. African Rainbow Capital, I've kind of been watching it, and I've always read their results and can never understand why they think the underlying value of the businesses that they buy is twice, three times more than the market values it. So I'm a great believer in the market, in what the market what people put on a price. So I'm always concerned about directors' valuation. I haven't looked at this deal. As I say, I've got great respect for Paul. He might have been muscled in by, as you say, the two Johans. They must have got him there like a hooker, two props, and squeezed him in between and said, "You're going to buy this," But I got to go through the deal. But up to now, I've liked what Paul's been doing.
Andrew, would you like to add to this one?
Yeah, I agree. Little bolt-on acquisitions here and there with Sanlam. They did the Saham deal in Morocco a while back. They've done Assupol now, and then the one that's come out this morning. So yeah, look, Sanlam's been a pretty good business on the JSE. I haven't seen how they've done against the other insurers, but I'm guessing that probably from a performance perspective, one of the best insurance companies on the JSE.
Brilliant. Let's go into some stock picks now. My director tells me we don't have much time, so let's go as quickly as you can. Andrew, we'll start with you. Which counter are you going with this afternoon?
Perfect. I'm going with ASML. We were talking about NVIDIA earlier, but ASML sits right at the top of the supply chain for semiconductors, and they are basically a monopoly.
Brilliant. So David?
And they've been knocked unfairly. Yeah, anyway. I'm going for the S&P 500. I'm going to have simply, and I'll tell you the reasoning is that I think we're going into very strong couple of months now as rates start to come down and confidence starts to pick up in the US. I still think we're going to end the year a lot better than we are at the moment. That's a simple choice. I'm getting, I've still got to find something for Wednesday.
Yeah.
So Andrew's taken ASML. I'll have to find something else.
Sorry, David.
Well, guys, it's always fun talking to you. Thank you so much for today. That's all for tonight's Stock Watch. Thanks to our guest, Andrew Padoa from Sasfin Wealth, and David Shapiro from Sasfin Securities. Yeah, that was a tricky one. Up next, the close. Stay tuned.
Thank you.